Good morning and welcome to the ADS Securities Markets Update with another busy day ahead of the weekend. Beginning with the Asian session today, 4 key economic figures were released from China and Australia, which had another short-lived impact on the markets, as all eyes are shifted toward the US jobs report, which will be released later today. Australia's manufacturing index improved above the 50 key level, reaching 50.7 in July, which is the first increase above the 50 since November of last year, up from 48.9. However, the PPI unexpectedly fell by 0.1% in the second quarter of this year, compared to a rise of 0.9% in the first quarter, while it had been anticipated to rise by 0.7. This is the first quarterly decline also since the first quarter of 2012. In China, manufacturing PMI also improved for the 5th month in a row, rising to the highest level since May of 2012 at 51.7 in July, up from 51 in June, while it had been anticipated to rise slightly to 51.4 only. However, the HSBC Final Manufacturing PMI has been revised down to 51.7 instead of 52, despite the fact that it has been anticipated also to remain unrevised. However, this is the second monthly increase above the 50 key level in a row and the highest reading since February of 2013. Finally, the Bank of Japan Chairman Kuroda kept the positive outlook unchanged despite the recent slowing down, while the policy will be adjusted if needed. As for the European session today, we will be focusing on manufacturing PMIs for the month of July from Spain, Italy, the Eurozone and the UK. Most of these figures are expected to come in higher in July rather in June. In Spain, the estimate points to a rise to 54.8, which would be the highest reading since July of 2007. In Italy, manufacturing PMI may rise slightly to 52.8, which would be the highest in 2 months. And the Eurozone may stabilize at 51.9 unchanged. The UK is the only country that may show some slowing down, as the manufacturing PMI may decline slightly to 57.2 in July, down from 57.5. Going forward to the US session today, we will be focusing on the US jobs report, of course. The non-farm employment change is expected to add another 231,000 in new jobs in July, while there are some arguments of a weaker number along with the ADP non-farm employment change. However, the unemployment rate may stabilize at 6.1% in July as well. The key figure for today would be the average hourly earnings, as any sudden increase above the estimate would be the catalyst to push the US dollar higher further. Furthermore, we will be watching the core PCE price index, the personal spending and the personal income, which is likely to show whether the second quarter GDP will be revised down or not. Finally, the ISM manufacturing PMI may increase to 56.1, up from 55.3, which would be the highest reading since January of this year. However, yesterday's significant decline in Chicago PMI down to 52 from 62 may lead to another sudden drop in manufacturing PMI today, as both indexes has a quite strong positive correlation since 2009. This is it for today. Stay tuned and follow us on our social media sites, Twitter, Facebook and YouTube, to get the latest economic releases, reports and analysis, in addition to our special report on the US jobs report, which will be released also later today. Have a good day for now.